All right, so this is TradingView. Okay? This is TradingView. Now, I requested that you download TradingView. If you don't have TradingView, download TradingView because you need TradingView, all right, to trade it. If you know how to use TradingView, it will help you in trading. I need to take a trade right now. I just saw this is gold. There's something I've been waiting for, and this is a confirmation. So I just saw a close. I'm going to explain all of this later. This is a close above this, and it's with a bullish engulfing. So let me go to my phone now and take that trade. Wow, this other trade has gone back to not. Okay. So gold is a buy. Gold is a buy. So I just bought gold now. And my TP will be 26.57. $26.57. That's my TP. 26.57. That's 321 pips. 321 pips. Okay, permit me to look at another one, a trade I've been in. AUD card, all right? The trade was in profit of about 20-something dollar, but I just saw it in negative now, serious negative.
It's just showing Zoom.
Hello?
We are not seeing it. It's just showing Zoom.
For you? All right, let me stop share and share again. Okay, so this is where I am. This is the gold I just told you that I got a confirmation to enter now. And this is one of the strategy I want to share with you today. All right, you have it on TradingView. Now, TradingView is where you do your analysis, okay? You do your technical analysis before you now take it to your MT4 or MT5 and enter the trade. So TradingView is the biggest technical platform. There is no way you call yourself a Forex trader and you don't know what TradingView is or you don't use TradingView. All right, so this is the trade I just entered now. I was waiting for a confirmation and I got the confirmation. So I just entered the trade now. I'm going to show you in the course of the journey. I'll show you what the trade will be doing. Can you try and work on clients that come for the seminar? Okay, okay. Okay. All right, so I was looking for AUD card. So let me see AUD card. I'm on AUD card for a buy. Is it a sell? It's for a buy. But from what I can see now, excuse me, trade was actually in profit. But is now selling. Okay, so I may have to close this in a loss because I don't know how long the sell will be because all right, so how many of us here have TradingView? Please, you can unmute yourself and speak, all right? Unmute yourself. How many?
I have to.
Okay. All right.
I have to.
Okay, tell me have. Chibeze have.
No. Maybe should we do it right away or we can do it after the class?
You can do it after the class, no problem. Okay, so this is TradingView where we are now. You can use it on your mobile phone, and there's also a mobile version, all right? You can use this one that you are seeing like this now on your Google Chrome on your mobile phone, and you can also use it on the what do you call it? On the mobile app, okay? So this is the trade I just exited now. It has started selling. So now this is one of the strategies I want to show you. Very cheap strategy, but very potent. All right. Now, TradingView allows you as a free user 3 indicators. Okay. Me, I'm a premium user. I can have as much indicators as I want. Okay. But for a free user, you have maximum of 3. So this strategy is only 3 indicators. So the first one is this one that has green line and red line. Green when it is to sell, then it becomes red when it is to, green when it is to buy, becomes red when it is to sell. Okay. Now this is called smoothed Hekinachi. All right, smoothed Hekinachi. Okay, this is called smoothed Hekinachi. Now, let me show you. So how do you look for smoothed Hekinachi? Now you can see that here I have multiple, I have up to 1, 2, 3, 4, 5, 6, 7, 8 indicators on this chart. But if you don't have a premium account, you cannot have it. Even if you have the first one, what's the first one? Let me check. Okay, no, I'm not leaving chat. Okay, you can see my account. You can see premium. This is premium, okay? This is the biggest subscription. This subscription is $280 annually, okay? For you to use TradingView, okay? So, but there is also the free version which gives you access to 3 indicators. So the first indicator will be smoothed Hekinachi. So follow me. How do you now add smoothed Hekinachi to the charts? You come to this indicator. This is indicator. I believe you are seeing my cursor. Come to indicator and you search for smoothed Hekinachi. Smoothed. So you can see it here. Smoothed Hekinachi. This one, smoothed Hekinachi candles V1 by Jack Mick. Okay, so you add it. All right. For you to add it, you just click on it. It will be added. The settings are default. You don't need to do anything. Do you know I wanted to enter this trade when I closed the buy? I wanted to enter the trade when I closed the buy because I saw a confirmation that this trade is going down. I wanted to enter it when I closed that buy, but I just say, since I'm in a class, let me leave it. Do you know that this trade has done 15 pips as you and I were talking? And this 15 pips is what some people look for in a day. As soon as they get that 15 pips, some people look for only 10 pips. Some people look for only 20 pips. Some people look for only 30 pips. As soon as they get it for that day, they are off. Imagine someone who is trading with a 20 standard lot size. All right, 20 standard lot size. Normal standard lot size, 20 pips would be $200. Okay? So someone who is trading with 10 standard lot size, 20 pips will be 2,000. 10 standard lot size, 20 pips will be 2,000. Then 40 pips will be 4,000. So that is, some persons, that is just what they look for. They don't stay on the market for too long, or no. They just look for the target. As soon as they have it, they launch and they are out. They close for that day. All right. Okay, so that's number one, smoothed Hekinachi. I believe you are watching. Then the second one will be 200 moving average. And this moving average is exponential. So you come here and you type EMA. You come to this indicator, you click on it and you type EMA. EMA is moving average exponential. So this is moving average exponential. So you click on it to come to your charts. So this is it. When you come to your chart, you have to change the parameters. So by default, when you click on moving averages, it will show you 9. So you'll be changing this place to 200. The period is 200, okay? So style is the color you want. So here I'm using black. You can use any color. It's not a tag that you must use black. At the end of the day, what you do, you just come here and you click OK. So that's number 2. Then you want to add the 10th indicator. The 10th indicator is MACD. MACD. Okay, MACD is moving average convergence divergence. All right, moving average convergence divergence, MACD. And this is the MACD, moving average convergence divergence. So when you click on it, it comes here. So this is it. Then you leave it on the default settings. Okay, so this is smoothed Hekinachi candle. This is 200 moving average, and this is MACD. So these are the things you are looking for on this strategy. It's a very potent strategy, so please take it seriously. If you miss anything, you'll be watching the video, right? Make sure you watch the video, okay? So now there's no strategy you are using in isolation, okay? You don't do without the market structure itself. So you want to know, are we trending upward or we are trending downward? You want to know the direction, the ultimate direction of the market. So you go to daily. Now this is daily. This is daily. Now, if you look at daily, basically we are trending down right now. We are trending down. We were up, all right? Then we are trending down as it speaks. So you want to go to lower time frame and look for sells. You want to look for sells because the sells will be more potent, all right, than your buys. So you'll be doing buys, but those buys will be very short-term buy compared to your sells. So you come to 4 hours. You can see 4 hours. You can see the buy that has come like this from here, okay? So this buy, this sell rather, look at where this sell started. Now, let me tell you how to use this strategy from here. Now, you want to see that the candles are below or above the Hekinachi candle, all right? The smoothed Hekinachi. This is the smoothed Hekinachi. So when the candle break below, now this candle, this was the candle that break below, this red long candle break below. Now it break below, what do you wait for? You don't just rush in and enter immediately. You want to wait for a pullback, okay? You want to wait for a pullback. So a pullback is these 3 candles. So you have this first green, 2, 3. Now, after the pullback, in the course of these 3 candles, all right, the last green candle printed a red bar already on the smoothed Hekinachi. And another thing is that you're already below the 200 moving average. You are more comfortable selling when you are below the 200 moving average. You are more comfortable selling. Then you are more comfortable buying when you are above the 200 moving average. Okay? But these are combinations you want to look at. You are not working with anyone in isolation. And you are not also forgetting the market structure and price action. All right, when we talk about price action, you're talking about candlesticks, patterns, all right, chart patterns, All right. So all those things, you put them together. So now what are you looking for after the pullback? So now after the pullback now, I believe you are seeing my cursor. So this was the last blue candle. Let me expand it. Okay, so this was the last blue candle, green candle rather. This one. Okay, so this was the last green candle, and it already printed red smoothed Ekinachi. Okay, now what are you waiting for? You are waiting for the first red candle that will engulf the last blue candle, the last green candle. So now we now have this first red, it engulf. What does it mean to engulf? To engulf means to swallow, to be bigger than. So if you see these two candles, the red candle is bigger than. The red candle is bigger than. You see the red candle, the body, we are looking at the body now. The body of the red candle is bigger than the green candle. So what do? At the close of this candle, you don't need to waste time. You enter this trade. At the end of this candle, you enter this trade. So now for me, if I had entered this trade, now this would be my, so I'm going to be entering this trade from here now. Though not all the time you will just catch this thing red-handed. Sometimes you must have made some moves before you came, okay? But that notwithstanding, this is where your stop loss should be. Your stop loss is a little above this last green candle. Then your take profit, you want to look at the previous low. So this is the previous low. This is the previous low. You bring down here, okay? So this is actually 4 hours candle. Now this 4 hours candle now, this trade from that level did how many pips? This trade from that level did 90 pips. 90 pips. So this depends on what lot size you are using. And this 90 pips happened in how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It happens in 14 candle. So 6 is 1 day. 6, so 12 will be 2 days. So it's 12. That's 2.5 days. All right. So let's assume you enter this trade like on Monday. By Wednesday, the trade is closing. All right. There will be pullbacks and all of that. But if you know what your target is, you want to, by this time, before it will come to this level and be doing all of this, you must have broken even. Okay. You just break even just to make sure that the trade that was in profit will not come back and put you in negative. Now, so now that we have looked at only this side, what about this side? Now, this side is called the oscillator. The MACD is an oscillator. So what do I look for in the oscillator? Before I want to sell, number one, I want to see that the histogram for the red, for the sell has shown red. So this is the histogram now. You see, it has shown red and is below 0. So you can see where it started showing red. It started showing red from this red bullish bearish candle, this long one. Then even with this 1, 2, 3 green candle, it still did not change. It maintained the red and it's still below the 200, below 0. Okay? So before this time you enter. So that's number one. Then number two, you already have a cross. You already have a cross of the MACD signal line. All right. So this is the signal line. You already have a cross. So this cross tells you that we are moving from buys to sell. So these are a combination of how you use this strategy. Okay, so now this is actually on a higher time frame now, which is 4 hours. So before you get this confirmation and you are entering this trade on a 4 hours, you know that you actually have the time to wait. But so let's just assume that you just want to take your trade today and make sure that your trade closed today. You come to something like 15 minutes. You come to something like 15 minutes. Now, in as much as, yes, you have looked at higher time frame where I said there is also some good pullback that will give you something beautiful as long as your conditions are met. So now look at this buy. Look at this buy. This is a buy on a lower time frame. Very potent strategy. This strategy, if you sit with this strategy alone and trade Forex, you will take 10 trades and you will win 7 or 6. And those 7 or 6 will cover for the loss of the other 4 or 3. And you still make plenty profits because your stop loss is usually very low compared to your take profits. Okay, so now let's look at this one. Okay, what are we looking for? I said we are more comfortable buying above the 200 moving average. Is it not so? That's number one. We want to see after there's a break above, there's a break across the Ekinashi candle, you want to see a pullback. So this was the impulse move. This was the impulse move that this was the impulse move, okay? This is an impulse move to the upside. Then this was the pullback. So you are looking for this pullback to happen. After this pullback, what do you want to see? Please, someone should talk to me. Let me see if you are following. After this pullback, what do you want to see before you take the trade?
A buy.
Eh?
You take a buy. You need an engulfing candle.
God bless you. You want to see an engulfing candle. You want to see a candle engulfing this last one. So this is the last red candle now, which has given you the pull. So it's more like a break and retest. So it has broken it up and it came down. So you want to see this candle engulf the last red. So as soon as you see that, you want to look further down to now check your histogram on the MACD. Has it given you green boxes? Okay, so it even started giving you the green boxes from here. This is 1, 2, 3, 4, 5, 6. So it's even on the 6th one. So you want to pick your trade from here. You want to pick your buy from here. So this is where you are to enter this trade. Okay. Now, where would your stop loss be? Your stop loss will be below the previous swing low, which is the red. If you have to be buying, if you have to be selling the last red candle or just below that level. Now, you want to look for your targets. Now, for me, my target in this case will not be too much because I want to look at the previous level, all right? And looking at the previous level, this is the first one I saw, okay? Except if I'm entering to position, I want to go further back, and when I'm looking at this now, that is too far. So I don't want to go too far. I want to use this as my target. So this is my target. So this is actually 1:1.75 risk to reward ratio.
Bless you.
Thank you. Thank you. So you can see, so in how many minutes? In how many minutes? 1, 2, 3, 4, 5, 6. So in 6 candles, which is 15, that is in
90 minutes.
In 90 minutes, you have taken profit on this trade. Yet the trade still continue to run, okay? And at the end of the day, it actually did 19 pips. You know, this is a lower time frame, right? So the pips will also be small as well. So this is how to use this strategy. And I believe you guys actually follow. It's a very potent strategy. If you can sit with only this one to trade your currencies, all right? If you can sit with only this one to trade your currencies, your gold, all right? You will see that only this one can give you what you are looking for. Only this one can give you what you are looking for. Okay? So you can see here as well. So this one now, this guy broke above. This guy broke above. This was the one that broke in. This one actually broke in. Then this tend to be the retest. So you can actually enter at the close of this first green candle. Then your previous swing low should be, the safest one should be this one. Because this one did not really give you a swing. All right. This is the one that gives you a swing. So this is the safest one. Now, most times when you see all these long candles that comes with plenty wick, they are as a result of fundamentals, news. Like this one now, there may be news or something about that happened around fundamentals that caused this spike, okay? So that's why to protect yourself, you need to want to give yourself some good gap for, and these trades, so your target will be here. This is your target. And you can see that you are looking at the previous high, very close to the left. So when you see, and you actually got the target. So it's the same thing. Okay, so then let's even look at this one. Let's look at this one. This may be a trade I took previously. Let me check. This is a trade I took previously. When was this? Okay, no. It's not. I didn't take this trade. Did I? No. This may be the one we use in the 4 hours. This is what we use in the 4 hours. Let's check. It is. It's the one we use in the 4 hours. Okay. This is what we use in that 4 hours. Okay. So, any questions so far on this? Any questions?
Yes, sir.
Okay, go ahead and ask your question.
All right. Thank you, sir.
Yeah.
Oh, we are taking some water. You're reacting to something, right?
Yes, I am actually those of you who are in Lagos, this is, I went to Lagos and I had to see my brother who stays in the Ikorodu. So going to Ikorodu, the dust was something else. It's the dust that actually gave me this since Sunday. Yeah.
Hey, sorry about it.
Yeah.
All right. So we are once again for
Thank you.
the effort and all the putting in force. Okay, then concerning this strategy, I want to ask that this one now is basically or strictly for currency, isn't it?
Yes.
Okay.
Yes. Now
Okay.
it's not like you cannot use it for, it's not like
Synthetic.
you cannot use it for synthetic. But it's just that you don't have those synthetic on this TradingView platform. We are going there.
Yes.
We are going there. I said I'm going to give you 4 strategies, right? Yeah.
Yeah.
I'm giving you 4 strategies today. So this is the first one, basically on currencies. You understand?
All right. Okay.
This one is
okay.
the first one on currencies, yes.
All right. So then, what then is the relationship between this strategy and fundamental? Fundamental.
Okay. Yeah. Now, at least by now, you should understand what fundamentals are, right?
Yes, sir.
Okay, so fundamental has to do with economic news, political news.
It may be confirmed from others in the class if they know what that means. Okay.
Hello, people, I believe we all understand what fundamentals are. Irene?
Yes, we do. Things like war,
Okay.
news about war, news about politics. They just concluded I mean,
We
election in the
just-
US affects everything.
Exactly. So those are fundamentals. All right. That's why we took this class. We took it, all right, step by step, so that you get all of these basics before we move further. Okay. So let me check this, my trade. Now, I actually took this trade when we entered this, when we just entered here on 1 hour. Okay, so now I saw something. Okay, I saw something when we came here. This was where I entered this trade. Now, I was waiting for, because in as much as this trade has moved from here, all of these pullbacks give you opportunity for re-entry, all right? So this trade, now, if you were to actually wait for the pullback on this trade, you will not enter from here till this point. Probably after this strong candle, because this first one did not engulf this guy, all right? Even if you had used this one, you see some strong pullback first, okay? So now, this happened, so you would have been able to enter the trade from here to continue. Now, another thing happened. After a break above the 200 moving average, this trade is pulling back, is good. So I think I would want to take the profit first. Let me see. Wow. Let me take this profit first. I will come back to it. Okay. So that's profit of, okay, $48. 1 minute lot size. Okay. So now the trade I just took now that did that $48 is from here. It's from here. We just came and I saw it from here now. So this after a break above the 200 moving average, there was this dance around. This dance, yeah. Then this guy came down. This guy came down. And this guy came and did what? And engulfed it. So it was after seeing this engulfing candle, I entered that trade. All right. Ordinarily, the journey has even just begun. The journey of this trade has just begun. All right. But because I have not really settled down to look at that, to know exactly what I want on the trade, I don't want to leave it. Let me collect the one I have seen first. Until when I'm settled, I will run on the trade again. So in the absence of any other question,
So I have a question.
All right, go
Hello,
ahead.
sir.
Go ahead.
Hello,
Go
sir.
ahead. Yes, ma'am.
Hello, sir.
Yes, sir.
Hello, sir.
I can hear you.
Have you answered the question?
Which of them?
What is the relationship between this strategy and fundamentals? For instance,
It does not have to. Hello, sir.
yes, sir.
Fundamentals and your trade market does not have anything to do with strategy.
Strategy, yes.
Strategy is just your pattern, your style of trading, all right? But fundamentals, whether you are using strategy A, you are using strategy B, you are using strategy Z, fundamentals will always affect anyone.
Okay, sir. Now you know what I'm asking this. What I'm asking is this. So it means that even if you see a good setup,
yes,
provided by your strategy,
yes,
when there is a very strong news coming in, don't enter a trade. Simple.
exactly.
That's what I want to.
Exactly.
That's what I want to.
Now, when the ones that get you informed, those ones that you know about, those ones are called economic news, economic calendar news. Those ones you can actually know that, okay, by 4 p.m. there will be so news, right?
Yes.
That type you can stay away from the market until after the news. But
Like
there's what we call macro as well. Those macro fundamentals does not give you room. It does not tell you that this is what is coming and this is what is. So you just wake up one morning and you see that there's one long plume. Maybe the Prime Minister of Israel, all right, has spoken based on the war, or the election has just been concluded in the US and there is a sentimental move in one direction based on the fundamentals. So that's just it.
All right. Okay, sir. Then okay, that has been confirmed. Then what's the relationship also with this strategy and your sessions?
Now, sessions. You're talking about the New York session, the London, and the rest.
All right, sir. Yeah.
Now, if you want to talk about session, if you go back to your studies, you will see that where we have all of these all these short movements, all of these things, they are actually the Asian session. All these ones now that happen like this. All this happens during the Asian session. I don't know if you get the point I'm trying to make. The sessions is based on the activities that happen in these different times. Now, the Asian markets is the smallest. And in the Asian market, we have two sessions. We have the Tokyo session and the Sweden. This Tokyo and what? But the two of them, we call them the Asian session. Tokyo and what? We just learned this thing now. We don't forget.
Sydney section.
Sydney, yes, Tokyo and Sydney session. Okay, so those ones they are very, very. The volatility is quite low during those markets. Okay, so those are the ones that. So, but when you talk about the New York and the London session, that's where things happen. That's where you can see all of these great movements. All these movements you see from here to here now, like this one, like this. All of this type happened during the, the London, New York section. All of these ones will happen during the Asian sessions and the rest. All of these ones, okay? Then we can still have consolidation.
Sorry, sir. Please get some water and drink.
All right, I have water here. Okay, so all of these things, there may be consolidation that run from the Asian session into the London session, probably awaiting a very strong news. Sometimes if there's a strong news like the NFP or the CPIs and all of that, sometimes the market just remains stagnant, waiting for the reaction of what will happen during the news. So just like you say, you stay away. You are not the only one staying away. Many other people have made a decision to say, I'm going to wait for the outcome of the news before I go into the market. So you have all of this kind of consolidation, even when you enter the London session. All right, so any other question?
Sir, please, I have a question.
Go ahead.
Your indicators, what indicators are you using?
This is what I just gave you now. Were you sleeping?
I didn't get it because I was having a network issue.
Don't worry, watch the video. The reason why I did this is to give
the last thing.
Hello?
Hello?
Yes.
Okay, yeah, on the MACD indicator. Now, when you were giving us tips on that, like the signal line has no function there.
The signal line, this one?
Yes.
It has a function. Now, I told you that, number one, this guy has shown green, all right? Then this signal line has crossed the MACD line. This blue one is the signal line. The orange is the MACD line. So this one has crossed. So it's telling you that it's going up. So you want to look at the combination of this and this, plus what you have put together on this other side. Can you see a cross here? Can you see that there's a cross here? And it cross and remain open.
Okay, the blue crossing the red?
Yes. That's an indication that is an indication that it's changing direction.
That means it can buy.
Not it can buy, it's already buying. and you already see this confirmation on this other side. It has shown you green above the zero line. This line now is the zero line. You can see this line in between now. This is the zero line.
Yes.
You have these standard blocks already building above the zero line. This is, you don't need to wait.
Okay.
Now, do you know that all of these strategies I'm giving you guys now for free now, in some cases, people pay for them. There are people who know these things, they will never show you. Yeah. They will prefer to always give you, okay, maybe just be giving you signal. You are using them to make money, you'll be satisfied with the signal. But the reason why you need to know all of these things, so that on your own, at your own time, you'll be practicing and be using them, even when you start using it on your demo.
God bless you.
That over time, you will now build some confidence.
Hello, sir.
You build some confidence and you can begin to take trades on your own.
We appreciate that.
All right.
I appreciate you, sir.
Sir, can you use these strategies on your demo account?
Why not?
Yes, sir.
Now,
okay.
you're not taking your trade on TradingView. You only came to TradingView to do analysis, and you go to your phone to take your trade. So whether you are taking it on a demo or you are taking it on a live account, what you came here to do is to analyze your market.
Okay, when you're done analyzing your market on TradingView, how do you copy it down to your Meta 5?
You do need to copy. Is it not buy and sell you execute on your phone? Is it not buy and sell? It's for you to now look at the figures here. Okay, let's assume you want to say, okay, this is my TP. TP is 2642. You put 2642 on your MT5
Meta.
TP. Then you say, okay, your stop loss is this. You put the figure you are taking from here.
Okay.
All right.
Well
so
understood.
Let me stop recording for this particular one. Let me stop recording. Even if you want to continue questions, let me stop recording so that the video will not be too long. Okay, it's already long, so let me stop recording.